What would I do if I was given a hot tip? I don't think I'd walk away from that hot tip. I think I would run away from that hot tip. I'm Steve Foerster at the Ivey Business School. I do research in capital markets, and my most recent book is In Pursuit of the Perfect Portfolio, co-authored with Andrew Lowe at MIT. There's no such thing as a sure bet. And you want to keep in mind that don't succumb to the peer pressure through perhaps the social community that you're involved with, because that hot tip will probably not pan out. What's the difference between passive investing and active investing? With active investing, you are choosing various securities that perhaps you think are undervalued or you think are going to outperform the market. With passive investing, the philosophy is really different. If you think that you can't beat the market, then you want to join the market. And you can do that by investing in an index fund or an exchange-traded fund, an ETF, that replicates a broad market, such as in the US, the S&P 500, or in Canada, the S&P TSX. A lot of research shows that it's very difficult over the long term, let's say a 10+ year horizon, to beat the market. There may be only 20% of funds out there that can beat the market, and what's really difficult to do is to identify what those funds are going to be that may outperform. So over the long run, you're often better off just investing in a passive index fund. What's the best investment advice that I've received? In the context of real estate, you've probably heard the saying that it's all about location, location, location. In investing, it's all about diversification, diversification, diversification. And this all goes back to the 1950s. Future Nobel laureate Harry Markowitz came up with this whole notion of what's called modern portfolio theory, which boils down to don't put all your eggs in one basket if you want to improve your risk-return relationship. Look for opportunities to diversify not only across securities, but across different asset classes such as stocks and bonds and real estate, and look for opportunities to diversify geographically as well.